Hey traders, Raghee here, and in this free recap video we're going to cover some of the nuances of options expiration alongside the price action in a handful of important stocks. And this is something really important to think about when you are trading the broader averages. The broader averages, of course, are made up of heavily weighted stocks in certain sectors and subsectors, and of course the NASDAQ, the S&P, and the Dow. So what I will do going into going into options expiration actually is not that different than what goes on into a pre-FOMC or non-farm, because they're all volatility events. That's really what they are first and foremost. They are triggers for volatility. So in that regard, they do have a very similar effect. But there's something a little bit more interesting and transparent about options expiration. So the first thing I'll do into expiration is I'll just look for names that are possibly, first of all, in uptrends and are closing in on possible corrections of their uptrends. So a retracement, a correction, a reversion to the mean, whatever you want to call it. For me, that reversion is going to be to the 34 EMA wave. That's my mean. That's the reversion I'm looking for. So there were a number of stocks that met this criteria going into. So this will actually start with the pit below that's established the Thursday, Friday in front of options expiration Friday. So I'll start looking for it around then. So the previous Thursday, Friday, and then I'll roll it right into the Friday. And I'm looking for that correction. So actually only two corrected. So let me show you. They're actually both on this chart. And that was Johnson & Johnson, boom, and Facebook. Boom. Now, it's not enough for a market when it comes to what options expiration might reveal. It's not enough for it to have a pullback. And by the way, each one of these pullbacks would be valid even if there wasn't options expiration. It's simply the volatility catalyst that I'm looking to play, the catalyst of the move to the downside. So options expiration is just a reason to focus on why the market might correct. We don't know that it's going to, I just want to be ready. And then, like I said, there's a little bit more transparency. So what we'll do is we'll head on over to the option chain. The option chain is like an interesting alternative to finding support and resistance. It's not really that difficult. You want to focus on, let's go to the Facebook here for the example. So you want to go take a look at what kind of open interest. You want to find the high open interest, and then you want to see the corresponding strikes that have the highest open interest. So you might take a look at, all the different high open interest levels. Right? So there's the puts on Facebook. You can even take a look at the calls. Where are the highest open interest levels? And then you'll just kind of make a mental note of that. Now, if those high open interest levels correspond with levels that I am interested in buying, so let's go back on over to Facebook since that's the chain we just looked at. If those levels correspond with levels that I am looking to buy, then I will look for the pullback opportunity. Now in this case, the zone for the entry right in here starts at about 166, even above 166. And goes down to 161.5. So if I can see some strikes with some decent open interest in this zone, I feel really good that if we pull back, and again, the pullback is necessary. So if we pull back, I can look for a buy, which again, that zone is valid anyway because I'm in an uptrend and I'm looking for a correction. But what I get from the open interest going into expiration is just kind of this extra confirmation plus the volatility that's going to happen because of this, in this case, quad witching. So take a look at this. This is going to happen every month. All right, this is something I do every month. So today we got Johnson & Johnson and Facebook entries. Why those two stocks? Heavily weighted name within the broader averages. So there's a really good connection back to being a futures trader because you're looking at these names anyways. They're important to us because they're heavily weighted within the average. So hope that helps. Check it out next month. We'll talk about it again, probably the second week of next month. But just wanted to show you how the aftermath and the opportunities affected a number of stocks. I'll see you in the next update.